Yeah, we take applause for the beginning, that's all fine. We'll take one applause for the beginning and one applause at the end. If there are special situations where you want to burst into an applause by any chance because somebody says something extremely good, then go ahead. Yeah? That's the spirit. That's the spirit. So, guys and girls, thank you very much for joining me here on the panel, and thank you for everybody listening. We are, in fact, conquering one of the things that interests me the most, which is pretty odd because it has to do with risk and with risk management when it comes to digital assets. But why is that so important, and why is it good that we're all sitting here? We have seen FTX in the past. We have seen very poor risk management in some of the cases that are now going like through the media, and this is bad for the community. This is not only bad for Bitcoin and everything else out there, but it's also bad for the general media perspective and how politicians look at it. So I'm very grateful that we are having such an elaborate panel here. And now, without any more further ado, I really want to dig directly into it and ask Alireza, because he is consulting a lot of the financial players in the market. How has the perception of digital asset and risk management, how has that changed over the years? Because we both know each other since quite a long time. So do you see any changes in how the players actually address these issues when it comes to risk?
Yes, Ben, first of all, thank you for having me here, and very interesting to be in Hamburg, in such a lovely place. And yeah, as you said, we're into this industry for a long time. I actually started in 2014 looking into this when people didn't know the difference between Bitcoin and blockchain. They thought it's the same. So we have passed that time, obviously. However, we are still in a phase where knowledge is very poor, and it doesn't just come with the investors, it comes overall, like with the market players, with the authorities, with the lawmakers, and I think this knowledge part is very important when we talk about risk management. I mean, in the beginning we talked about risk management only from the perspective of the FATF and the German regulator BaFin about how we protect the consumers from volatility risk, but this is not the only risk. So when we talk about risk, I mean, now where we've seen FTX and other players, we talk about ring fencing of assets, client assets, and institution assets, but there are many more risks which you should know about, and this is something which comes with knowledge. If you have the knowledge of the technology, have the knowledge of the product, have the knowledge of your market, then we talk about different aspects of risk, and this is also the development. So with the knowledge of the technology, market, and product, the risk is evolving, and the risk understanding is becoming also better, and also the management. I do believe it's the same, and this brings me to another question for Sasha, because Sasha is working at a DWP bank, which is a bank with a great heritage in, let's say, the traditional finance world, and you stated that you will be moving into the digital asset space at NH. So when it comes to understanding of risk, understanding of crypto, what were the highest walls that you had to actually conquer or get across to get your management board into approving getting into Bitcoin?
Well, thank you, Sven, and thanks for having me. First of all, I only want to emphasize what you just said, because education actually is the success factor, and it is an answer for itself to your question, in my opinion. But in more detail, I would say it has two aspects based on our journey. One aspect is getting started, because getting started is the hardest thing in a regulatory organization, at least, because you need education, strategy, and of course vision in some part, and that is really important, because you have to tell a story to the board and have to educate them on what are the vocabulary behind it, what is the context related to FTX and so on, and what is your personal USP, because it's all mixed up. Understanding is still poor in C-level, unfortunately, in our opinion. And that is a really game changer, because when it comes to risk management and risk functions, usually in regulatory organizations, they expect to have all the answers already at the beginning and all the business case details. It doesn't work like it in crypto and to get started. And the second aspect is to keep going. And I truly believe especially after FTX and learn from it on the journey. And I truly believe you have to live in a polygamic relationship with all your stakeholders, meaning you have to keep them informed, you have to educate on an ongoing basis and repeat it all over again to raise awareness and actually to come to a learning curve, which was for us a game changer, coming towards a risk culture and risk mentality for crypto as well and digital assets.
Yeah. When we're moving a little bit further down the line, and I thought about how we should address this panel. So we're now getting from the a little more broader things into the more specific questions. So Ben, you're running all the cool things at Börse Stuttgart Digital that have to do with our retail broker, which is Bison, and then also the institutional broker. So how do you make sure that there is nothing blowing up from the risk perspective when we're looking at listing new coins, for example?
Yeah, I think first of all, Börse Stuttgart has a high tradition. So what we always do and what we said at this educational part is very important externally, but also internally. So what we did is we look into the traditional business and try to move it to this new space, this cool space, as we would say, right? So we use patterns and things and regulations or processes the old traditional world already knows, right? So when it comes to the listing process, for example, we don't only look at, first of course, our customers are key, so what they wish, we look into that for the coins, but also what do the competitors listing do. AML is heavily involved in this process, so there's the committee. And what we also do, we for every coin we are listing, we getting an external legal opinion on it, right? So what it is considered. Is it e-money? Is it a token? So just if it's considered under KWK as a crypto Wertpapier, then we're going to list this, right? This makes us slower than others, but I think it's very important for us, right? For example, I mean, I'm the product guy, and for me, it's sometimes too slow, obviously, right? But so it's 2 hearts in my breast, and the other ones, I'm P&L responsibility is there. So if something blows up, the GC will come to me and ask me. So I think it's important. So good example is the paper coin, right? So many customers, we have now over 700,000 customers. So they ask of, obviously, there's a new cool paper coin. It was a dog, now it's a frog. So when are you going to list this frog? And if there's not enough liquidity and we didn't really understand into detail how this project going to work, how centralized it is, what parameters are there rumors in the market, whatever, we rather not going to list it, even though it's a business, and a business decision would be very smart as a broker just to list this paper coin. A lot of volatility, it goes up and down, it's a bump in and out, so we would make money with it, but it's not the key, right? Because we need to gain the trust, not only from the retail customers, but also from institutions, so it's important for us to always have this two-sided, I would say.
Yeah. Veronique, what made you change your career from the traditional finance world into the digital asset stuff? And are there any particular things specifically on the AML side that you want to add that maybe are different when you compare the traditional finance world with the new digital asset world?
Well, first question, what made me change? So after more than 20 years in traditional finance, I made the move because I was very much interested in this new asset class. And I realized that more and more institutional clients wanted access for this asset class, not for all investors, but the huge ones came along a couple of years already ago. So at first sight, I thought, well, is maybe just a period that is gone.
That's going away.
That's going away.
Yeah, that is something like the internet. Yeah. Maybe it'll go away. Yeah. Mm.
But then it was further a question of, will it become a payment process, or where do we go, or will it just disappear? Then it came up as an asset, and the more institutional clients were asking for it, the more the more important it appeared. So I thought of digging into it myself, started trading a bit and trying a bit, and I was a bit concerned because it took me a while to get such a wallet. There were so many different providers. It was really, really difficult. I did my first trade with Bitcoin.de, and that was just a horrible process. And I thought, well, if I ever lose this key, I will never get to the money again. Don't spend too much.
Yeah, there are a lot of people here who can relate to this issue, I guess.
So that was my first impression, and I thought, well, it might need some time. Then it became bigger and bigger, and when I realized that the regulatory setup in Germany as a front runner is quite comparable like a CR credit institution, it became more and more interesting because there was a framework from the regulator that is not easy to apply because you need to look beyond. So while focusing first on compliance and AML risks as the first instance, which is fairly to say not too far from traditional finance because the process you're looking at is the same. You identify the source of wealth and you need a proof of funds. Doesn't matter whether it's cash, which is far more dangerous than crypto, or any other asset that you receive. So you need to look at it quite closely. But while looking at the FTX matter, what could hit a customer? He could lose the funds, so you need to make sure that you have a proper safekeeping in place, which is close to a custodian, where I've been working before. Then you need to make sure that your process is compliant and that the client is safe and also feels safe. And the other topic is you need to avoid any risks that could cost you your existence. So everything that is threatening to the company as such, which you have to apply to in the German world. With a German license, you have to apply to MA risk, you have to apply to the German Banking Act and so on. So you are regulated, and this is the combination I really appreciate. You are a bit like a bank, and you are a bit like a fintech, like a crypto company. Both together, I think, is ideal for the client, but it's a challenge for us because we see a lot of deviations in the markets between the European countries. Because Germany is the only country that expects a registration that is beyond the common virtual asset service provider registration like in other European countries. So I look at it with gratitude that BaFin is currently pushing back and really pushing hard on crypto providers that enter the market, do marketing, but do not comply with the requirements.
Well, yeah, I think there are many people who saw the news today. That was the news you were referring to, right? Okay, so can you maybe elaborate on what was on the news? Because maybe not everybody got it.
Yes, so today BaFin issued the new minimum requirements on risk management, which we have to comply with. And they focus on the topic of risk management to further strengthen it. And of course, to look beyond. So we are looking at default risk, market risk, we look at liquidity risk, at operational risk, and further topics like reputational risk, strategic risk, and so on. So compliance and AML risk is just a tiny piece, but this is where Maik comes into play, because we use a lot of help from blockchain analytics.
Yeah, and I think also another news we saw today between the regulator and how seriously they're taking now to also giving this license to companies. We just saw the headlines probably today that Binance has been rejected to get this license. So we see that they really looked in depth into what is there and what is not. And we just also got the license this year, so it really took us quite a while because of this, like the BaFin just looks as a traditional finance institution and then getting into the space of crypto, they just look at it as a whole company and then judge. So it took us quite some time. I think it's a good signal. It's not a good signal for the market, but I think it's for the customer and retail customers that they're really taking this seriously and really have high standards there, right? Because they also get to learn and educate themselves. I think it's way better to talk now to regulators than it was like a few years ago. I think it's good, yeah? It's important.
Indeed, but you need clear commitment, and that was my reason to join Bitpanda instead of other crypto service providers, because if you don't have commitment, you remain in this stage of being a crypto company that is not that serious, maybe, than a really regulated entity.
Yeah, well, I think talking to 160-year-old Börse Stuttgart and DWP Bank, I think it's one of the widest panels that you can basically get. And being white and staying like white in terms of the white shirt, I think there's one person who is helping with the orange shirt. So Maik, how are you helping your clients? And what was the wildest thing that you have seen in your career while working with a crypto institution? You don't need to drop the name, but I want the story.
So first of all, I also would say thank you for having me in this panel, and so having me here in my beautiful hometown, Hamburg, as well. Yeah, we are doing the magic behind the scenes, I would say. So even though, if we're speaking about public blockchains, so not every wallet tells you the right story if you look into the data, right? So, and that's what we are doing. So we uncover a story behind a wallet, and not even just one wallet. We try to figure out if the owner behind this wallet probably owns a lot more of wallets, because you need that holistic view to understand the risk out of that wallet, out of that owner of that wallet. Probably there's an entity, there's a regulated crypto exchange behind a lot of, and thousands and millions of wallets, and just one wallet or 10 wallets are infected. That's not the whole story. You need to understand the whole story to make your own risk and the right risk assessment. So if it comes to an onboarding process, especially in that case, it's absolutely necessary to understand, you already spoke about that, where is the source of funds, to understand what is the behavior of my customer. Do I want to allow my customer to come into my business? So I need to understand the risk before I doing business with a customer. And that's what we are uncovering. So the wildest story, so let me think about that. I think the wildest story is not really blockchain analytics related. It's more in that topic and the area of education. So that we had a meeting, a workshop together with one board member of a big TradFi institution here in Germany. And
you can drop the name, that's okay.
Yeah, I will drop the name, so for sure. So, and once we are in that workshop, so he has compared things from the so-called fiat world, the cash world, the normal money world, I would say, to things happen on the blockchain. And he asked the question, hey, Maik, so once we get some dusted coins, once we get some dust into our wallets, why not sending it back? Yeah, so, and you have to explain them that a blockchain is only forward-oriented. So they don't have an understanding about the technology behind that. The different processes, procedure, things around crypto, there's minimal understanding. And so we see a lot of gaps in regard of education, and I think based on that, there are coming the wildest story out of that. Yeah, so it's really a gap.
Yeah. Well, I think education is key. That is one thing that we can all agree on. Maybe just a personal side note. When I'm trying to explain like regulatory stance and how regulators look at it, I sometimes feel that they are trying to actually look at a new technology, just like the development of from cars to flight. because it totally makes sense to make, for example, a law that if you have two vehicles, like on an intersection, that one of these vehicles has to stop because otherwise they would crash. But when you are inventing something that is so different, like flying, you can actually move them so they can get past, because if you would say they have to stop when they intervene, they would just fall down. And I think that is a good picture to get a glimpse of like how sometimes regulation tries to stuff the blockchain technology into the old things. And this is also this same risk, same rules, same regulation approach. I think that we might want to, and maybe you would agree in this room, hopefully, and hopefully all of you in the panel, that we would kind of try to shift this when it comes to the conversation about it, that we don't say same risk, same rules, same regulation, but that we say different risk, different rules, different regulation, because it is a different risk. It still is a risk, but it is a different risk.
And I want to add to my explanation before how easy it is to do money laundering on blockchain. So if you get that dust in your wallet, and you trade it to another wallet and you give it to another person or somebody else on the blockchain, you have laundered it if you are a KYC regulated entity, because we assume if you send some exposure to someone else from a regulated entity on the blockchain, we assume you have done your job. You know where the source of funds of that coins are. And therefore, they will be white labeled by us. So it's not visible anymore that the source of funds then is criminal activity. So as a regulated, as a KYC'd player on the blockchain, you have money laundered in that case. If you don't have your processes set up in the right way and to understand, okay, so if there's dust, I have to quarantine it until I know that I can trade that coins again.
So, Benjamin.
Yeah, I want to say, it's exactly what you said, right? So it's always important when we did all the procedures and the processes, I said, traditional, do this, but what we also do is not only using like one chain forensic provider, but we use 3, right? And then we get like a risk score of it, and then use our own recognition, and then see, do we need to quarantine this? Is this fine? If it's fine, we're just going to rebalance this to the omnibus accounts. We also separate the accounts or the deposit addresses per client and per asset. And if not, then the procedures goes, the IML officers look into the manual process. But then at the end, if we need to, as you said, refreeze it, or then even inform the FIU or send it to them. So it's a really narrow and important process. And I think also, yes, it takes time and a lot of manpower, and also in our case, right? But it's important. It needs to be done. And what I wanted to add is, I think you're right, and it's an interesting conversation. But if you remember, I mean, we talking a lot to like big institutions right now, and it's always like this thin line between telling them, especially like this, they're like the C-level guys don't want that you teach them because they think so, yeah. And then you are in this room and have this like, this is how we always did it. Can you do it this way? And then we try to explain a new word a little bit that could be easier or more efficient, but you also don't want to push them back as they say, okay, no, then it's not for us. So it's we're getting there, but it's very, very slow, right? So it's not, you cannot throw it at them at once. That's what I want to say.
Well, absolutely. I don't have this problem with, explaining anything to my C-level guys because they know it all. One of them sitting at the back, so I gotta have to say that. Maybe one more question to Veronique before we then move to you guys one more time. So there are more and more people out there and projects out there who actually accidentally or non-accidentally reveal their name in regards to their ETH address. So I would make up just a fully made up scenario. So we see a lot of metaverse stuff happening and NFTs and stuff like that. So if you would be working at a traditional financial institution, say at a bank, and you say, hey, I bought this NFT is shown at OpenSea, then everybody knows which Ethereum address belongs to you. And if then somebody would wrap a Bitcoin on Ethereum, you can wrap Bitcoin and send it on the Ethereum chain and would actually send this to this person. What happens then? Is that okay? Is that not okay? Does he have to do taxes for that? Does he have to fill it in? What happens then?
Well, depends.
Well, that was a very lawyerly answer. I would have expected that from Alireza. Depends.
So we look at our clients quite holistically, like Maik has indicated. So we have different sources to gain information, different sources to analyze beyond just what we see from the blockchain analytics. Depends on the risk level of the client, and of course if a Bitcoin is sent, then we probably hit all our risk limits. So this asset would go into quarantine, and we need to figure out who has sent it. You're just allowed to use it for yourself. So having someone else sending it is tricky and just not allowed. If it's fraud, for example, someone stole the identity and tries to log in and so on, we have numerous processes to avoid it by two-factor identification and a lot of other features to not allow it. But I'm pretty sure we would identify it. It's just a question, if it's about 20 euros, then probably not. If it's more, then probably yes. But there is no 100%. I think that is important to understand, but that is all about risk management. You have never the right figure.
Yeah, you want to chime in there?
Yeah, I mean, I'm looking at this for a long time. And what I don't like about regulators looking at crypto or blockchain is putting too much complexity in it. So taking out the complexity of this example, I can also find the IBAN address of any bank, of any of any company, and send over some fiat money. So the same approach in this scenario of fiat money and crypto has to be the same. It shouldn't be technologically discriminating. It should be neutral. And that's the point. So if I would send you over some money, I'm pretty sure that your bank wouldn't do anything, even if I would cross 5,000, maybe even 10,000 euro. So there are some thresholds put there, and there are some strategies for that. And you shouldn't put different strategies at different thresholds because it's not crypto. It has to be the same. And therefore, this is how I approach it usually, talking to people who are new into crypto and blockchain, telling them, forget about the wallet, forget about the blockchain. Just think, how would you deal with this case if you have a fiat transaction? It should be the same for crypto.
Yeah. Totally agree. We are slowly running out of time. There's one thing that I wanted to very briefly touch light on. You already said that it's technologically discriminating. We're seeing potentially technology discriminating rulemaking when we're looking at MiCA and the RTSs and the Durchführungsverordnungen, whatever that is in English, popping up. Did you guys from DWP Bank have had a little like deeper view on that? And why did you decide Bitcoin first?
Actually, why we decided Bitcoin first, because it's the place to be for retail clients, to be honest. We talk a lot about institutional products and offerings bringing to the market, but actually the demand is with Bitcoin and the cryptocurrency interface. That's basically why we decided to start with it, and it's the best place to be when we started 1.5 years ago, because MiCA was not yet realized or published and so on. And actually, to be honest, the customer is asking only for Bitcoin when he starts first. That's basically the point to look at. From the technical point of view, I think we decided based on our current business model on our own way, because basically our offering is a data play. So we don't have much blockchain in it, only between liquidity and custody. And I think data has a lot of untapped potential to address all these issues coming up based on a transparent regulatory regime. which is not yet there when we talk a lot about our clients, also about investment advice and not only trading, which is also a topic I think we could spend a lot of time discussing it.
Yeah, well, a lot of time is the only thing that we don't have by now anymore because we're done with the panel, with the timing. I take these steps out of this conversation. Sasha is proposing a polygamic relationship to all the different people involved in the risk management functions. We all start moving and keep moving into the right direction of crypto. It is Bitcoin first. And with that, thank you very much for the panel.
Thank you.